Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, we still kind of got the market trying to push higher. Now we had a down day, right? Okay, maybe we'll get 2 or 3 down days, but the market is still above the 20-day moving average. The S&P will not break below the 20-day. We're well above it actually right now, but we're coming back in a little bit, but we'll probably just bounce off it and head up higher. I do think this is coming to an end soon. Now, a lot of people think we're in the middle of what's known as a crack-up boom. Now, it may be a mini crack-up boom that we're doing right now. I mean, it's pretty much been a crack-up boom since last October. We've broken below the 20-day maybe one time, all right? But pretty much just a crack-up boom. Now, what is a crack-up boom exactly? Well, it's when they expand credit, right? Now, when they say expand credit, what they really mean is debt, right? They increase the debt limits. The U.S. prints money it doesn't have, and the debt limits expand. The credit expansion, they call it, because they want it to sound positive, right? But what does a crack-up boom lead to? It leads to inflation, leads to actually a real crack-up boom, leads to hyperinflation in general. Hyperinflation, very bad for a country. You don't want to be in the country's currency when it's hyperinflating because you're losing your purchasing power. So maybe you want to consider getting some gold, getting some silver. People will want to be out of the financial system when there's a crack-up boom. All right, let's get over to the real estate market. Now, they did a study. This was out by Lending Tree. They came up with the number that 18.3 million people are house poor. 18.3 million house poor. Well, I could tell them that without doing the study. They should have just paid me to do the study. I would have charged them less money. But anyways, 18.3 million people bought a home that is financially unhealthy for them. Now, I think the number is much higher than 18.3 million, but what they're saying is that 18.3 million can't afford their house and they'll put it back onto the marketplace. And this is where a lot of the inventory will come from. You see, they bought the house maybe in the last couple of years or so, and they paid a high price for it. They got a high mortgage rate, and now inflation's starting to crush them, right? Starting with the utility bills, the property taxes, the HOA fees, the maintenance, the insurance. There's a lot of fees for home ownership, and this could be a problem. Now, this bubble that we're in the United States, we're not the worst. We're not the worst. No. Okay, China, they had the biggest one, right? But they're already starting to crumble. Canada's got a bigger bubble than us, but they're in a lot of trouble because they don't have the 30-year fixed mortgages. Their mortgages come due every 3 to 5 years. But you see, it's really interesting. A lot of their mortgages, they come due and they give them a new mortgage, but they keep the payment the same. Well, how does that work? Well, they tack it on. It's like a negative amortization mortgage. They tack it on at the end. Now, I'm not an expert in Canada. I'm sure I'll get some comments that correct me on that, but that's my take up there. They got this mortgage rolling over at a low rate. They now have to pay the higher rate, right? So their housing market is going to come tumbling down. That's my take. Australia's got a really big bubble, bigger bubble than we have in the United States. And in the United States, we've had the biggest bubble we've ever had, a lot bigger than the bubble of 2006, 2007, and it will come crashing down. You see, this bubble has been inflated. It's artificial. There's no real a reason for accepting the printing of money. You print $30 trillion, now it has to find a place to go, right? And it goes into the houses, okay? So a lot of investors were buying houses, right? Because they get the money really cheap, and they'd have to put the money somewhere to generate more money, and they found the housing market. They could get 4 or 5% when, not mortgage rates, but the rates were at 0%, so a lot of companies like Blackstone could get the money from the Federal Reserve at 0 or 1% and go out and make 4 or 5% and become very wealthy doing this. All right, but what's happened now? Now, investors for the last 6 months have been negative, right? Instead of buying homes, they're net, they're selling more homes than they're buying right now. They're getting out of the market. They see the writing on the wall, if you will. You see what they see coming. They don't want any part of it. They stopped buying homes, and now they're selling more homes than they're buying. So this marks the top of the market, marked the top of the market in 06, 07, when investors stopped buying and they actually went negative. That was the peak of the market. Now we're at the peak of the market right now. Now we've been there for about 6 months. They're trying to hold it up. We got that election, print some money, put some programs out there, keep these houses inflated. They're praying it doesn't collapse before the election. They're praying the stock market doesn't go down before the election. And that's why we're having this expansion of credit to get liquidity into the marketplace so we can have this mini crack up boom in the stock market and we can hold the prices high on the houses. Okay, so that's the thing right now. But investors, they're not having any part of it, right? They're starting to leave the market. They've stopped buying. They see the writing on the wall. Now, I talked to, economists, right? Economists, they don't see any recession coming. They don't think everything's, everything's great. Everything's rosy. They listen to the mainstream media, apparently. Now, I have a lot of friends, got in an argument with one the other day. Do not talk about this stuff to your friends, to your family. You will lose friends and your family will hate you. But if you talk about this stuff, that's why I have a channel, so me and you can talk about this stuff. You see, they see no recession coming. They see everything's great. They see that, it's just fabulous time, best economy ever. And that's what my friend was trying to tell me yesterday, telling me that this was the best economy ever. And he got upset because I'm laughing. I'm going, I'm glad you believe that, but that's like so far from the truth that, you just got your head in the sand. And I used a few more harsh words than that, but that's basically what I told him. And he was telling me I was just a crazy man. I was too, once again, Mike's just Chicken Little. And I appreciate the comments. A lot of people think it's a compliment to be called Chicken Little in this market because you don't want to be out there when this really starts to crumble. And it will start to crumble. We're in a house of cards, just for an example. Okay, I went and looked at this property for these people, okay, the other day, and it was a condemned house. You can't live in it. It's not safe. The city won't even let you go in. It's got to be mowed down, right? And it was selling for the bargain price of $700,000, but you got to tear the house down. Okay, so the lot basically was $700,000, and actually, it was a bad part of town. I didn't think it was really a good deal for my client, but they were interested in it, so we went and took a look at it. It was, like I say, the lot was in a bad area, but $700,000 for a lot on the bad side of town, and you still have to do the work of the demolishing and tearing the property down before you can build your house. And then you got to build, and then you're in the bad area of town. Now, let me tell you about back in 2012. 2012, Los Gatos is a very wealthy area, a very rich part of town. And we were looking at this one house, and I was trying to convince the people that they should purchase this home. And it was fascinating because the home was going for, it was bank owned. The bank owned it. The bank took it back for $2.2 million, but they cut it in half because they were having the fire sale, kind of like what they're doing with commercial real estate now. They take it back at $100 million and they dump it for $50 million. Okay, half off. Actually, it's probably closer to $100 million and dump it for $10 million into commercial properties. But back in 2012, all these properties were going back to the bank, and this was a very nice house. Sold originally for $2.7 million. They put $500,000 down. Bank gave them a loan for $2.2 million. Bank had to take it back, but now the bank's dumping it on the market for $1.1 million. And this is a beautiful home, a 3,000 square foot home in Los Gatos for $1.1 million. I'm just like begging my client. I go, we got to get in and we got to buy this. This isn't going to last long. And they were an all cash buyer, and I knew I could get the bank to take the all cash deal. They were higher offers, but I did get them to take the all cash deal over those higher higher offer because they wanted that quick close. They wanted this off their books. You see on their books, it made it look like they were idiots. They loaned 2.2 and now they sold it for 1.1, but they just washed it under the rug then, right? But okay, so now how did I convince my client to buy this property? And I go, look it, the land is worth $1 million. You're getting a 3,000 square foot home on the good side of town for $100,000. You can't build a 3,000 square foot home on the good side of town for $100,000. And I was lucky that they finally saw it my way and they went in and they bought the house, right? So you were getting the house pretty much thrown in for free. You were just paying for the land and you were getting the house for free. Well, the house that he bought for 1.1 million is now over $3 million. So he thanks me, he buys me a beer when we go out together. But you see, some of my friends, they listen to me. And then some of my friends, they don't listen to me because they think I'm an idiot. They think that I don't know what I'm talking about. They think that the economy is doing great. They listen to the mainstream news, the mainstream media, and the mainstream media tells them, hey, everything's fine, right? But I don't see it that way. You see, I see it that we're at the peak right now. The investors have gotten out. 6 straight months of negative house sales for the investors. And that marked the peak in 06, 07. I think it's marking the peak right now, right? But okay, now how low will we come back? Well, let's talk about this. Okay, so we've had this run up and it was a big run up, right? Okay, this bubble's bigger than the last bubble. They didn't let the last bubble completely deflate. You see, in 2009, they started printing the money and they kind of bottomed out around 2012. But here's my point. Now, could we actually go back to prices of 2012? Could house prices go back to where they were 12 years ago? And my take is, of course, they can, right? Now, maybe there's only a 10% chance of that happening. I think it's closer to a 90% chance of that happening, but maybe anybody's got to agree that it is physically possible, right? It's actually possible for that to happen. And I actually think that it very likely will happen. Here's why. You see, this has all been artificial since 2012, where the housing market actually ended up bottoming out, started going down 2007, 2008, and we took 4 or 5 years to hit the bottom at 2012. Okay, well, 2012, we go back to those numbers, that's 65% from where we're at now. So a 65% drop is going to bum out a lot of people. Now, I'm saying we'll probably only do 40%, but could we do 65? Of course we could. 65 is not out of the question, especially for places with big bubbles, which we are. China's already crumbling. Canada could come down that much. Australia could come down that much. You can leave me the comments. Tell me I'm a crazy guy. Tell me I'm Chicken Little, and I'm okay with that, right? But we could come all the way back down to that, and we'll see if that happens. We'll see how it plays out. Now, I think trouble's on the way. You see, my friend, he thinks there's no trouble on the way. He doesn't have any problem with, Russian nuclear submarines off of our coast. He thinks that's perfectly normal stuff. That happens all the time. He thinks that the economy is the best ever, that everybody's doing well. He doesn't even see the homeless people, although when we were leaving, I pointed them out to him. We got begged off by a couple of bums just leaving the establishment we were at. It's kind of interesting. So these are the best of times, really? Okay, well, if you want to believe that, put your head in the sand and just call it what it is, the best of times. And for you, in your mind, that's what it is. But I can't get on board with that because I see the world in a different light. It's called reality. Now, a lot of people don't like facing reality. And I'm not saying that reality is a good thing, right? I mean, sure, I could probably just ignore everything and just forget about it, but I'd like to make it better. And I think we can make it better, but we got to let it come back down first. We got to get back to a free market. We got to get back to away from socialism where we're at right now with the printing of money and the government intervention. That's kind of the Keynesian economists. And we got to get more to the Austrian side where it's a free market economy where we get back to sound money, real money, if you will, build gold and silver, and get away from the fiat currency that they're just printing into oblivion, destroying your purchasing power, and we can build back better. I believe that. Yes, I do. I believe that there's still hope for the United States. We still have a great country, but it's getting towards the end where we're losing our country that I grew up in for sure. I don't really recognize it much anymore, but I do see potential still if we can get back to a free market economy, get back to sound money, and get away from the currency that they can print into oblivion and end the Federal Reserve. We got to end them. They're an enemy. They've destroyed us. Lost 97% of our purchasing power since they've been in existence. They started in 1913 and they destroyed 97% of our purchasing power. And I told that to my friend the other day. He goes, well, what was it like before the Federal Reserve? Which was a very interesting question. Before the Federal Reserve, the 100 years before, your purchasing power doubled. It didn't lose 97%. It actually doubled. If you had a job at McDonald's, your purchasing power was making twice as much as when you started. Nowadays, when you get a job, you're getting paid in dollars and those dollars are going down. We have to get rid of the Federal Reserve. They destroyed us, took away, literally stole from us 97%. And the 100 years before, it went up by 50%. Your purchasing power did. So it's night and day, night and day. We got to change some things. It's not too late for our country. I got to tell you, there's still hope. We have a great country. I love it. It's where I grew up. It's my home. I don't want to see it get destroyed, but for some reason, the group in power, they want to destroy us. I mean, it doesn't matter. It's not a Republican or Democrat thing. No, it's a government thing, right? They're not our friends anymore. Government used to be our friends. You know, the Federal Reserve, they have never been our friend. They have been out to destroy us from day one, and it's time for them to go. Just my take. If you like this stuff, punch the subscribe button. If you really like and give me the thumbs up, why not? I'm Tall Mike. Get out there, everybody. Have a great day. We'll talk again soon. Bye-bye now.